Welcome to the Wealth Wisdom, where knowledge becomes power and power builds your future.
Every few years, the market gives us a moment, a turning point, when old industries collide with new technology. And those who pay attention early are the ones who later say, "I saw it coming." Right now, we're watching that moment unfold again. On the other, a company digging up the very element that could power the next generation of electric cars, AI servers, and energy storage, because both could reshape the next decade of investing. In today's video, we're looking at two fascinating companies positioned at the crossroads of technology and transformation. If you've ever wondered how a crypto mining outfit and a lithium miner could appeal to forward-thinking investors, you're in the right place. Imagine a world powered by artificial intelligence, electric vehicles, and massive data centers. Now, ask, who builds the infrastructure? Who supplies the raw materials? That's where these companies come into the picture. One is supplying compute power. The other is supplying raw battery metal. Are they early-stage players in these mega trends? Possibly. Are they showing promise in their finances or warning signals? Definitely both. Which company is further along and which has more risk? By the end of this video, you'll have a clearer comparison, and we'll break down their Q2 2025 results, their strategic pivots, their liquidity, their business models, and what all of this means or could mean in the context of the bigger picture. Before we dive in, please take a second to hit the like button, share it with your friends, and also subscribe. Please help this video to get at least 500 likes. It really helps to support the channel and keeps us bringing you the latest market insight. Thank you. Disclaimer: this video is informational and educational purposes only. It is not financial advice, and I'm not a financial advisor. Always do your own research before making investment decisions. So, first up, Bitfarms with the ticker BTF. What is this company? Bitfarms describes itself as a global vertically integrated company, building and managing data center infrastructure for Bitcoin mining and HPC AI. They currently report 410 megawatts of energized capacity, 17.7 exahashes per second of computing power, 14 operational data centers, and an average of 17 watts per terahash efficiency. Recently, they've been pivoting less purely Bitcoin mining, more towards infrastructure for AI and high-performance compute. Now, let's dig into the Q2 2025 numbers and what they mean. Revenue: $78 million, up 87% year over year. That's a strong jump, nearly doubling. Gross mining margin was 45%, down from 51% in Q2 2024. So while revenues surged, margin compressed. Why? Because costs in Bitcoin mining go up: electricity, depreciation, equipment, location variation, and perhaps pricing and difficulty for Bitcoin mining changed. Operating loss was $40 million in Q2, which included a non-cash impairment charge of $15 million in Argentina and non-cash depreciation of $37 million. That compares to an operating loss of $24 million in Q2 2024. So losses are growing. The loss per basic and diluted share is 5 cents versus 7 cents last year. Adjusted EBITDA was $14 million, which equals 18% of revenue versus 28% in Q2 2024. They earned 718 BTC at an average direct cost of production of $48,100 per BTC. They sold 1,150 to BTC at an average price of $95,500, generating about $100 million in proceeds. Liquidity? As of August 11, 2025, Bitfarms reported a total liquidity of around $130 million, comprised of $85 million cash plus $145 million in unencumbered Bitcoin. That is a positive. They've partnered with T5 Data Centers for HPC AI development at their Panther Creek campus in Pennsylvania. They also secured a $300 million debt facility with Macquarie and drew an additional $50 million to accelerate development of their data center campus. So what does all this tell us? Big revenue growth, yes. Margin erosion, yes. That's a red flag. Losses continuing, they're still in net loss mode. Strong liquidity and an interesting pivot into HPC AI that could be a differentiator if executed well. But Bitcoin mining is a very cyclical business. Bitcoin price, difficulty, energy cost. Their pivot helps diversify, but it's still early. Some concerns. Operating A per second dropped quarter on quarter from 19.5 to 17.7. Energized capacity dropped from 461 megawatts to 410 megawatts. This suggests scaling back as they repurpose assets. Bottom line, Bitfarms has upside potential through AI data center pivot plus Bitcoin mining upside, but also meaningful execution and margin risk. Now let's shift gears to Lithium Americas, ticker LAC. The company is developing the Thacker Pass lithium project in Nevada in a joint venture with General Motors. They are targeting the battery metal boom. As of June 30, 2025, they had $59.1 million in cash and restricted cash. During Q2, they capitalized $124.8 million of construction and project-related costs. Total capitalized costs reached $574.1 million. Engineering is 70% complete and expected to reach 90% by year-end. The company is still in the development stage, heavy investment before revenue. Liquidity is solid, but liabilities rising. Alignment with EV mega trends is clear. Lithium supply is essential for batteries, but risks include cost overruns, delays, and lithium pricing cycles. The joint venture with GM and DOE's to point to $6 billion loan is major validation, but execution risk remains. Investors will want to watch break-even timing, production ramp, and pricing. Comparison: Bitfarms, operational, generating revenue, pivoting to AI, margin pressure, volatility, near-term catalysts. Lithium Americas, pre-production, large capex, long-term EV thematic play, higher timeline risk, bigger future potential, short-term excitement. Bitfarms, long-term foundational potential. Lithium Americas. Thanks for watching this deep dive into Bitfarms, BITF, and Lithium Americas LAC. We've covered what they do, their Q2 2025 results, their strategic angles, and their risks. As always, this is commentary, not a recommendation. If you found this video helpful, please like, share, and subscribe. And drop a comment below which company do you find more compelling and why. Stay curious, stay critical, and I'll see you in the next one. Keep learning. Bye.